All right, let's go. Let's go. Hey, what's going on? Beast Mode Brandon back again. How's everybody doing? Good evening. Happy Tuesday. You know, it's a great day when we all here on the call. You know what I mean? But hey, I value you guys. Tonight's objective, I just want to go over our weekly income plays, give you down the breakdown, not only just for that, I mean, in trading in general. Because like I said, I've been getting a couple questions, and instead of just addressing that the couple 3 or 4 individuals, I figured we could just do a full call and reinforce right what we do, why we do things, and why we take action when we do. But first half is let me go over some of this to dive in, and then if you guys have any questions, concerns, anything like that, it's your guys' time in the second half, right? I'm about to sneeze. Not coming out.
God bless you anyway.
Yeah, it's about. Hey, it's like there it is, not there. You know what I mean? All right. So, first things first. You know, there's 3 things that I always talk about. That is trading with proper risk management. That's staying consistent to the plan, and that is just trading the plan in general, right? Without the plan, I mean, none of us are experts. You know, what makes us an expert is all of us following that plan per se. Let me see. I can't even see any of these colors. The following the plan each day, and then that works out. So I don't know why my background just keeps doing these crazy things. The white, I guess we're doing white today. All right. So first things first, right? Number one, you always got to use your proper risk management, and this is why. So we're gonna go. We'll go week 1, week 2, week 3, week 4. All right. And we're gonna have 2 different traders in this example of why we do the things that we do. So you guys know the weekly income plays. We post them every Friday, right? So we're going to deal with our rules right here, give or take. And every week it stays exactly the same. So we enter our weekly income plays, WIP, Friday around 3:30 p.m. is ideally the perfect time. That's star number 1. All right. So I'm East Coast time. So 3:30 p.m. to me, weekly income plays is East Coast time, 3:30. If you are West Coast time, you are 3 hours behind me. So that is going to be your 12:30 time. Yeah, can you guys not see my screen?
Nope. We see a screen, but we can't see the writing because of the background.
Gotcha. All right. Well, let me pull up a chart. Let me see if we can fix this. Does
Thank you.
that make it easier for you?
Yeah, there you go. There you go. There you go. Not the chart, but the chalkboard was a little better. If
Yeah.
you would.
Yeah. Yeah. Let me see if I get put. I don't know how to pull the chalkboard up. All right, so let me see if I can pull up a blank chart real quick. Let me see here, and then we'll make it easier for you guys if you can.
There you go. Oh shit.
We'll just do this one right here. We'll maximize it. See if that one's a little that one has less. All right, can you see that now a little better?
Yep, that's
Yes.
fantastic. Thank you.
Perfect. All right, so what I was saying is weekly income plays. We take everything on Fridays. You see right here, 3:30 p.m. Eastern time, right? Another thing you gotta do, you gotta risk the same dollar amount every single week. If you don't, you're not using proper risk management, right? Does everybody follow me? You're not using proper risk management if you do that. The next star, you got to be consistent, right? And I'm going to tie all these things into that. So weekly income. Last thing we got down here, I'm going to put the star right there. Last thing, stop loss equals Thursday before bell, like ending bell, before bell, right? I know that's hard to see, but just hang in with me real quick. What I mean by that. So the reason I say all that things, weekly income plays, we take them every Friday. Whatever the AI scanner screener gives us, me, Mike, and Jamar, we put a lot of time, energy, resources into that, and that's why we win. I want to say 90-95% of the time. We are not 100%, and that's where that risk management aspect comes into the picture, right? Number 2, you got to risk the same dollar amount, right? So one way that I do the weekly income plays, if I trade one contract on each side the first week, and it doesn't lose, the next week I'm taking two contracts. Why? Well, if I say I have an 85, 90% edge over time to get profits out of this trade, then to me, I'm playing the odds in my favor. We are doctors. If we have greater odds, I'm okay risking just a little bit more the following time. All right. So, reason I say I have to risk about the same dollar amount because 50% ROI is 50% ROI. This is a little example. So let's say one day we take Amazon over here, AMZN, and one contract on each side is let's say $200, right? And then you come down here and you take a big boy. Let's do CMG, and we take CMG, and one contract on each side. That's about $1,000. All right. Let's say you win 100% on Amazon, but you lose 50% on CMG, right? Technically, if you won 100% on here, right, 100%, and you lost 50% down here, are you net profitable or are you not? You're not net profitable, right? Because you're losing 50% on $1,000, you're losing $500 down here, right? But if you're winning 100% on $200, you're only winning $200 to the upside. Is everybody following me? Put a 1 right now if everyone is understanding what I'm saying right now. If you're not, no worries. I'm going to bring it full circle for us. All right, I see tons of 1s. So now hear me out. If you risk the same dollar amount and you risk $1,000 here and you risk $1,000 here, right? Now you just made $1,000 up here. Down here you lost $500. Guess what? You're walking away with a $500 plus winning week on just the weekly income play. If you didn't risk the same dollar amount, you see how you are harming and hurting yourself, right? Everybody follow me. You are putting yourself up against the grain, up against the wall, and making it a lot harder on yourself than what you actually have to do, right? So that's why I always say, people, first things first, set your calendar, set your alert. You want to take these trades at 3:30 p.m. I try my best to give them to you at 3 o'clock, the 3:15 area. Sometimes I get tied up, and by 3:30, 3:45, we should be in these trades, right? That's first things. Second thing, you have to risk the same dollar amount every single trade, right? Now, they don't have to be like $201 and $201. It could be like $230 and $190 or $200. That's in the same vicinity, right? But risking $200 on one and $1,000 on the next, that's not in the same ballpark. Would you guys all agree? If you agree, give me a 2 in the box. If you agree on that, give me a 2 in the box. Every single one of you guys should be putting 2s in the. All right, I see 2s coming across the board. Perfect. So that is why I put them in this order. First things first on your calendar, we're taking on Fridays. Second thing, we risk in the same dollar amount. Third thing, you have to be consistent, right? This is why I say consistent. Week 1, week 2, week 3, week 4, right? I'm going to come over here and we're going to erase this because we are now in the next part, just so you can see how simplified this is. Try not to overcomplicate it. That's why we have these classes for everybody. You come in here and you stay consistent, right? Let's say you skip week 1 and then week 2, I'm going to put an X through it. That's the losing week. But then you miss week 3 and you take week 4. So you missed this one, right? You lost here. You missed this one and then you won here. Is that consistency or is that not consistency? That's not consistency, right? Because if you lost week 2, you definitely want to take week 3 because that increases our probability. Are you following me? That increases our probability. You get what I'm saying? That's why I always preach consistency, right? The fourth thing that I get tons of questions for, and we have a WhatsApp chat just for options traders. If you're not in it and you want to be, just reach out. We'll put you in it. I get this every other day. We're in a trade Monday. We took him Friday. Are you still holding, Brandon? I'm going to tell you this right here on the class, right? I am holding these trades until when? What do we say? Our stop loss, right? I don't have any predetermined stop loss, right? I'm okay taking a full 100% loss, but that doesn't happen. My stop loss is Thursday before That's crazy. I'm sorry for my writing. Before and Bell. Jesse, what's our stop loss?
What stop loss?
For the weekly income plays?
Where there's no stop loss.
That's right. When do we cut the trade if it never plays out?
Before the bell on Thursday.
That's right. Before the ending bell. Correct.
End
You got
bell,
it.
yep.
Right, perfect. So I'm gonna repeat it again. I take these trades Friday. We buy the following Friday's expiration. I am holding these trades until I see some sort of profits, right? And if I don't see any profits, I am holding it until Thursday, up until the closing bell. If my trade didn't move by that point, I'm okay taking a 40, 50, 60% ROI loss. Give me a DCG in the box if everyone understands that. All right, I see tons of DCGs in the box. Man, you guys are rock stars tonight. So now we're going to take all those rules and make it full circle, right? This is why. So we had Trader A. I'm going to give you an example. We had Trader A come in January, and I won week 1. I won week 2. I lost week 3, right? And Trader A, or Trader Robert, we're going to say, it's not his name, but we're just going to say Robert. Robert didn't trade week 1, didn't trade week 2, put his whole account in week 3. Is that proper risk management? Absolutely not. Put his whole account in week 3, and we lost, I think it was like 45%. So his account's down 45%. Do you think Robert, Ghost Robert, took a trade week 4? No, because now he's scared. Is that consistency? No. Is that risk management? No. Is that risking the same dollar amount each week? No, because he only took it one time. You know what I mean? And guess what? He watched all of us make all of our money on the 4th week, and he didn't take that. So I say that to say this. Another thing, I don't have a set ROI on these trades I like, right? Or let me rephrase that. I have a ROI that I like, and that's 1,000%. Realistically, hitting 1,000% is very slim, right? But very consistently, I would say we do and we can hit 25% to 75% each week very consistently. And that's a good number to have, right? That is a good number to have. So I say that to say this. If we take the trade on Friday and we come into the markets on Monday, and Monday we're in profits, say 20 or 25%, I'm going risk free because I know someone who did that. Yeah, Gretchen, me too. Hopefully you ain't talking about yourself. But I know someone that did it too. That's why I'm saying the story, except their name wasn't Robert. You know what I mean? So anyway, you come in, we take the trade Friday, and come Monday, let's just say we're up 17% ROI with the winning side and the losing side. Let me ask you guys this, get you guys engaged. Would you hold it for that 50% ROI mark, or would you be okay taking 17 or 20% on a Monday morning? Put a 1 in the box if you would close the trade, put a 2 in the box if you'd hold for you to do it. Josh, he says, I'm waiting for you to say something. Man, you crazy. Now you good, bro. I mean, you know me. I'll gladly share when I take the trade. I always share it. When I close the trade, I always share it. When I take the loss, I always share it. You know what I mean? All right, so we got all 1s in the box. Perfect. I love it, right? So the reason I say that is say this. We get these trades. Previously, I'm holding to take that 25%. That's what I'm saying, Quinn. You already know. I say that to say this, guys. Remember, we have weekly income plays every single Friday. Monisha says I'm greedy. Hey, and hey, at least you're honest. You know what I'm saying? But I'm gonna reverse psychology on you right here, Monisha. We get weekly income plays every single Friday. You don't need to be greedy because we always get them. We want to be consistently profitable, right? Now I'm just going to pick on Monisha real quick, right? Since she's being honest. So let's say week 1 we come in, and on a Monday we see 20%. Monisha's going to hold it, What if it only goes up 25, 30, or 40%? And then come Thursday, Monisha might take a negative 60% loss, right? So then we come into week 2, and the markets come up and they gap. They don't do nothing Monday. We all hold in. News comes out Tuesday. We go up 75%. Let's say after the trail stop, we get stopped out with 50%. And Monisha, she's going to get 50%, right? Monisha's down between the 2 weeks, negative 10%. We're up right now 70% between the 2 weeks. Then week 3 comes, and let's say we lose, right? Let's say we lose 60%. 60%, and Monisha's losing 60%. And let's say week 4 blesses us and we get 75%, right? And there's times where we gap down or gap up and we get 100% right out the gate. And let's say Monisha, she gets 75% too, right? Now, if you look at it like this, broken down, you have 75 plus 50 is 125, plus your 60, Monisha, you walking away with positive 10% for the week. It's not bad, you good, but if you take the money when it's there, right? You take the money when it's there, you get 70% plus 75% is 145% minus 60. We're walking away with plus about 80%. They're both wonderful because 90% of people are losing. You get what I'm saying? I'm just saying. Hopefully, Monisha, this gives you a different perspective, right? And since we get trades every single week, the AI scanner that me, Mike, and Jamar built, it gives us trades every single week. We don't have to be greedy no more because we just want to be consistently profitable, and that is how we all grow our accounts. You guys ready to grow your accounts and keep doing it? Put a 1 in the box right now. See, I like to do reverse psychology, and that's why I do the things that I do, because I used to be greedy too and shoot for 100% or nothing, and I'd lose a lot of them. Brittany puts a lot of ones. There you go. I'm just kidding, Monisha. I didn't mean to pick on you like that. We're just having fun. You know what I mean? Now, I know you don't care. But anyway, so that's my perspective on it. Real thing, we take the trades every single Friday, 3:30 p.m. Make sure you're in the trade by 3:50. If you take the trade after 3:50, yep, I'm sick of losing. Makes sense. Greed don't pay. All good. Hey, absolutely. Hey, we good. But we take the trade 3:30. Make sure you're in the trade by 3:50. The last 5 minutes of the market, the option, the bid and ask, tend to widen a little bit. So you just get crappier fills, especially market ordering in. We're going to risk the same dollar amount going forward, guys. We're going to all stay consistent. We got the WhatsApp chat to hold everybody accountable, and our stop loss. If the trade never goes in profits, we will close the trade Thursday before the market ends. And that right there is our weekly income set of rules, right? All right, so now, next, go ahead. What'd you say? You say something, Christina?
No.
Okay, perfect. All right, so now we're going to transition into the leap trades, right? Why are the leap trades powerful? All right. So the thing is we're just going to look at the SPY chart. Naked chart right here, just straight candles. Leaps are very beneficial. Same thing for the leaps, right? Why are we very good at the leap trades that we do? Well, guess what? Same thing. We got risk management, right? Risk management is number 1. Number 2, you still have to follow plan, right? Follow plan. Number 3, we're going to buy 6+ months, 6 or greater plus months of expiration, right? The leaps. This whole year, I lost 1 leap, right? I lost 1 leap. Last month, I'm going to erase all that real quick. Last month, we took a, right off the report, we took an O leap, real estate. We took this trade July 1st, which is right here, $52. It's up at $58. This right here is worth to me about 150% ROI on a leap trade. All right, so the same thing on the leap trades. I do the leap trades slightly different, right? When I take the trade, I put in a trail stop limit, and I'm going to show you right now. I put in a trail stop limit. We just want to go into Amazon. if I'm in the trade, right, and we out here, and this is the thing, you gotta remember, say we out here, what, 30, 60, 90, 180, we got 7 months of time, and we're in this contract right here. We come all the way out here, out to money, we in this contract for $450. If I take $450, right, $450 times, we'll say 25%, that's $112 net profit. All right, so if I get filled on this trade for $450, I'm coming in here and I'm closing my position out. And when we see that, we closing our position out, what are we doing? Well, this is already going to give us how many contracts we bought. When we close it, we're going to come over here and we're going to go to trail stop limit. I'm going to leave this up for about 3 seconds. Trail stop limit. Once we click that, right? If we get in here, what contract did we pick on? We picked this, nope, we picked this one, the 450. And we're actually selling it. We're getting ready to close it, not close it. We're going to do a trail stop limit. This right here, our limit price. If we do 450, let's see, 450 plus $1 is 550. So I'm going to put 550 in right there. If I press 550, that means I'm up $1. If I'm willing to go on a 12% trail stop, which is half of my profits, I will leave this at 50 cents. So the top part is the price the option gets to it. So we enter here, and this limit price is above your entry, because as price rises and your contract rises in value, it's going to hit the trail stop limit, cancel everything out, and put you in a trail stop, like a trailing stop. So we enter here. Here's your trail stop limit price. There's no downside loss, right? Because we can only lose 100% of the option we put in with a leap trade. We're not going to lose 100% of our trade because we do have a plan on that. We enter here. Here's our trailing stop limit. Price comes up, or I should say price comes up, hits it. Now it's going to put us into a trailing stop down here. So once the share keeps rising, this is going to rise up with it. But if the share price goes against you and comes down, it protects you from giving all your profits back. And that's why on the leap trades, I use trail stop limits, because a lot of times they trigger while I'm at the gym, I'm out for lunch with my family, we at Sam's Club, or I'm at a doctor's appointment or something like that. Or I could simply be upstairs eating lunch with my wife and kids, right? So a lot of people think, well, swing trading, you got to be at your computer all the time. You don't have to. You can use the trail stop limit and take advantage of it. Now, if you buy something that's cheaper, like let's say down here we bought this one, which we wouldn't, but let's just say we bought it. It's at $184. If we times that by 25, 40, 80, 120, 160, it's about 40 cents up. So if we come here to our trail stop limit, right? Trail stop limit, 180, 184 plus, what do we say, 40, which would be 225. If we use a 50-cent trail stop, right? If we use a 50-cent trail stop, guess what? 0.50. It's going to give all of our profits back. So if we enter here, our trail stop limit's up there, it comes up, hits it. Our stop out is way down here below where we entered. Well, if the share price drops and goes against you, I'm not willing to give all my profits back. Does everybody agree with me? We're not willing to give all of our profits back. So there is no universal trail stop limit, right? It is up to you to determine, right? It is up to you to determine what you're comfortable with. If I'm up 25%, I'm typically comfortable going in a 5 or 10% trail stop. Why? Because I'm not greedy. Why am I not greedy? Because we get leap trades every single month on the report. So we do not have to be greedy when we get these trades. We get these trades consistently month in and month out. Are you following me? So that's why I utilize the trail stop limits. I don't have a universal trail stop amount because of that. So in this example, if my target is 40 cents, I may go into a 0.20 cent trail stop. On the previous example, my target was $1.10. I may go in a 40 or 50 cent trail stop limit. If that makes sense for everybody, give me a 1 in the box right now. Would you ever use a trail stop limit on the weekly income plays, or isn't it possible because it's strangled? It doesn't matter. Hey, Gretchen, you can use the trail stop limit, because now think about this, right? If we come into a strangle, right? A strangle or a straddle, and we do the 185 calls and 185. Now we're not going to do this one because that's so far out. Let's say we go to this one right here. That one's far out too. Let's just go to this Fridays. Man, I don't know why these things are so expensive. Is it because Amazon has earnings coming up? That's exactly why. Look at the IV. 100. All right, we'll go to a different stock real quick. Let's just go to CAT. So if you look at CAT, right, and here's a little easy way to do it. You see where it says spread? You go to single, that's straight calls and straight puts. If you ever do the iron condors, you go to iron condors. If you ever do the straddle or strangle, you can click on these, right? So now, first things first, I always go to single first, because when I do my strangles, it depends on what strike is the hottest for me on that specific trade. But like in this example, I may not want to risk $1,000 for 2 contracts. So I may say, well, I'm going to come out here 341. I'm going to go to 350 where this is 226. And I may take the 335s. So I may do something like this where I may take the 350 calls at 226. And I'm going to take the 335s at 236 because that's pretty doggone identical. So then in my head, I know that it's the 335 puts and it is the 350 calls, right? 350 calls. Now I come down here to my strangle, right? And we go to 350. And then you can change it 350 to 335. Now look, our net position, meaning after you buy the call and the put, it is 431 cents, right? I don't care. So now think about this. You can use a trail stop limit in this too if you want, right? If you're comfortable making 25% ROI, what's 25% of 431? Well, we'll walk through it right now. 431 times 25% equals it's 107. So I know about $1 up would be where my trail stop's at. So when you buy a strangle or straddle, right, or an iron condor, the call and the put, it's technically one position. Even though it's 2 different legs in it, it is technically one position. So if we want to do a trail stop limit, we take this, we come out here, we do trail stop limit, and it's the same exact thing, Gretchen. We would say, well, 5.31 is my 25% ROI, and I'm going in a now remember, when you do this, you're going to be selling it. I'm going to go into a 0.20 cent trail stop, right? Because, I mean, that might even be a little bit too much. So that's 25%, 20 cent trail stop is giving 5%. Maybe you want that. Maybe you don't. And then if you're going to use that, make sure you come over here and you see where it says day. Make sure you change that to day to good till closed. And if you do that, Gretchen, you press confirm and send, your trail stop limit will trigger every single time this trade goes in favor. And if it never triggers, come Thursday, before the closing bell, we're going to close out of the trade anyway. If you didn't know that, you know that now. Did you guys know that? If you knew it, give me a 1. If you didn't know, give me a 2. I know Gretchen didn't know. Hey, that's a good question, though. Good job. Well, now you guys all know. That is why I utilize the trail stop limits on every swing trade I take. The only one I don't utilize it on is the iron condors, because if you're in our stock option WhatsApp group, we take them frequently. So I mean, I watch them every single day, and I like to let them expire to get max profit. Will this video be posted on Facebook page? Kisu, absolutely it will. Everything will be posted. So this is all recorded if you want to go back. But yeah, so, and then the other thing about the leaps, back to the chart aspect, right? Let's look at Google. Google was another leap. Here is a good example, right? Here's a good example of why I use a trail stop limit in place. So last month, August 1st, or August, why do I keep saying August? Because I just got done with the August report. There's some good plays set and getting ready. So you guys get ready. All right. So July 1st was right here on Google, right? See what happened to Google? Here's a perfect example. This move right here was enough to generate about 31% ROI. Guess who puts a 25% ROI trail stop limit? I do. If you didn't, guess what? you entered here, right? And this is, I'm gonna pick on Monisha again because she said she was greedy. Just kidding with you, but think about this. If this went up and got me in a trail stop, it probably sold me out on this day right here. Bummer. I walked away with a 20% gain. Am I mad? Absolutely not, because guess what? It's a net winning trade. Now, for those that didn't utilize the trail stop limit, right, you're going to be upset because you look at it right here. Oh, I'm up 31%. Down here, I'm down. I'm break even. Well, Brandon says it has to come back. Brandon didn't say that. Brandon says that we get a high probability to get expansion to get that 25 to 50% range, right, in the first 3 months, right, of the leap trade. And then after that, I don't care what happens. Well, guess what happens? This trade went all the way down here. This is actually getting ready right for a new leap for me because we come right down here, and this is a huge support, 165. Anyway, in July, I won on that trade. I called it out when I was closing it out. I'm winning on that trade. Same thing with Apple. Check out Apple, AAPL. Same thing. Why do I use the trail stop limit? Well, we're talking about theory, and then we're talking about actual game plan. Right here was Apple. This right here, what was this worth to me? This is about a 45% ROI winner. Guess what? It hit me in a trail stop right here at about 30%, came down here, stopped me out about 25%, right? And then that bugger went all the way back up here, went about 45 or 50%. A lot of people made more than me, but guess what? If you didn't use the trail stop limit, right, guess what? Price came all the way back down again. Is this a winner for me? Absolutely. There's another winning trade. Then you get in a situation where you take a leap trade like this from last month, and we got in this trade right here, right here in this little doji. Let me get my drawing tool right here. And then I got stuck in a trail stop right there in 1, 2, 3, 4, 5, in 6 days. And that thing still didn't stop me out yet. I'm in this trade right now for like 150%. Up here, this is 150% ROI on a leap trade. Well, guess what? It only moved 5 freaking points. That's a good trade. So tomorrow, I'm probably going to close out. Or I'm still in the trail stop. Because my trail stop never stopped yet. And that happens sometimes. So now, from July, I was able to manage about 200% ROI just on the leap trades. Am I greedy? No. Am I following the same plan each and every month? Absolutely. Because there's some months where our stocks might do this right here. We might get into the trade right here on the first, and then we get a push up, and then it never looks back again. I'm taking the green bag right there because at that point in time, I'm guaranteed to walk away with the green bag. Everybody follow me? How does decay affect the price ROI on the trail stop? I mean, well, decay doesn't really affect your trail stop by any means because your trail stop's trailing the option premium, and with that much, I mean, there is, but it's very minimal. So I'll tell you what does affect it though is when you get a large move up like this, and then you trade sideways. That affects it because now when you get these huge candles, you actually get something that's called IV hike, right, instead of crush. And then once it starts trading sideways, your IV increases a lot, which jacks up your option premium. And then when it trades sideways, it comes down to about like right there. You know what I'm saying? So anytime you get a strong push up, I'm willing to sell out in the strength because I know that. And now you guys all do as well. If you didn't, you do now. You know what I'm saying? And that's why we have these calls. So always know that anytime you get a good move like a day like this, I'm going to tell you this. It is very rare that you get a whole bunch, you get 3 days up. There's no way, I can't say no way, but it's highly unlikely that you get that them 3 days right there. Dude, this O is exhausted. And that's exactly what happens. Look, it doesn't break the low, but it comes back down, trades in this box for how long? To give another breakout. You know what I'm saying? I've been looking for this trail stop limit, but I didn't know that's what it's called. Learned a gem tonight. Monisha, hey, see what happens when you show up? You be transparent, and then you let me pick on you. Nah, I'm just kidding. You good. You know what I'm saying? You good. All right, that makes a lot of sense. Perfect. Today I closed the call on NVIDIA and rode the put and placed a 20-cent trail stop, got stopped out, then it kept going. Andre, that happens sometimes, but you know what I like to say? Bummer. It's green bag, bro. Congratulations. You just did what 90% of people wish that they could do. You know what I'm saying? You got to reverse your mindset. So with the leap trades, this is my plan right here. 1, 2, 3 months, right? I take the trade. I take the trade month 1. If month 1 my trail stop limit never gets hit, month 2 comes around, I use the mastermind report and I will buy on a bearish predictable day, meaning that if I took a leap trade right here and this was a bearish predictable day, the next month, this is month 1, this is month 2, this would be month 3, right? If I entered here and I entered down here, now my cost basis is right here. Guess what? There's enough to get me out of my trail stop. Because once you buy in again, that's going to bring your cost basis from here back down here. So once you get that increase up, at that point, you're going to readjust your trail stop limit because instead of you getting your 25%, when you average in, you're looking to get 75 or 100%. Which, I mean, when I average in the second and third month, I'm okay getting 10, 15% out of it because I just want to get my money back. But more importantly, I want to get my money back on a green side. So in month 1, if the trade never hits my 25% trail stop limit, right, I'll take another trade in month 2. If month 2 that never happens ever, month 3, I will buy another trade for my leap. And if at the end of the 3rd month, if my leap trade from the report never plays out in profits, I am closing it the very last day of the 3rd month. Typically, I'll lose about 30 to 50% ROI. That's manageable. Everybody follow me. If you think that is simplified, give me a 1 in the box. I know I'm asking a lot of you guys tonight. Awesome, awesome. I see a lot of 1s in the box. And that's really how easy swing trading can be. When you come in with the plan, you stay consistent and use risk management. Also use the trail stop limit. You know what I'm saying? All right. 45 minutes talking about the weekly income plays and the leap trades. I'm going to give you guys a chance to ask questions. So you guys come on the mic or throw them in the box. If anybody has any questions, let me know. Anybody want to come on? I mean, you can ask any question you want. It's kind of like a AMA. Ask me anything.
Brandon,
You up.
when it comes to your earnings plays, can you walk us through how you want us to do the steps with the risk management and the trail stop limit, etc.?
Absolutely. So, yeah, I work with Mike. Mike alerts the earnings plays. We use AI to kind of help put us in a position to take those trades, but the strangle plays, you want to walk through a plan. It's like the same thing. So we go our strangles, right? Same thing with the strangles. You have to follow our lead, right? And the reason I say that is because we're not just taking any stock just to take the strangles, for 1. For 2, we're using AI now, right, to incorporate it to give us a higher probability to get a winning trade out of that. But most importantly, after you follow the lead, the next star is going to be, what am I going to say? I'm going to say dollar amount. When you take these strangle trades, right, because they're highly we speculate what they're going to do, you still have to use the same amount of money on each trade. So you can't come into strangle. I'm in earnings. There should be earnings up here. Earnings trade, right? So it's the same thing. You want to follow our lead, right? Because we give you what our AI machine tells us what has the highest probability. Number 2, still got to put the same dollar amount in it. Why? Same thing. Let's say week 1 comes in and we take 1 trade with $200. We take 1 trade with $500, and we take 1 trade with that's not supposed to be 1,000, so that's just 500. Let's say we take 1 trade with 800. What happens if you win 100% on this one? You win, say 25% on this one, and you lose all 100% on this one. Guess what? Even though from an ROI standpoint, you would say, right, you guys should have been green because you're walking away with net 25% ROI between 3 different earnings companies, right? You won 100% on the $200, you're making $200. You won 25% on 500, you're winning $125. But if you lose 100% of 800, you're losing $800. Well, $800, you're gaining back 325. You just lost $475 for the week. When if you use the same dollar amount within the same vicinity in that risk management aspect we always talk about, you would actually be up instead of being down negative 475. You would actually be up, let's just say 500, 500, 500. You would actually be up, you'd be up, what, 5, 10, 15, 25% would be 250. You'd be up about what, maybe $350 positive for the week in 1 week of earnings, which ain't bad. You know what I'm saying? You could replicate that with just earnings trades and each week, give or take. You covered your subscription and you've grown your account. So the earnings plays, it's the same exact thing. You follow the lead, we'll share with you the targets to take. Maybe we'll hop on with Mike a different time and do an earnings masterclass, and he'll share how he finds his, and I'll share how I find mine for everybody. We use the same dollar amount, and we just stay consistent with it. You know what I mean? So hopefully that helps you a little bit, Monisha. Did I answer your questions on that?
Yeah, thank you, Brandon. I was really specifically talking about, I took the Amazon earnings play for the, I think they reported on Thursday. So I was just curious as I, watch it, what moves I should be making while I watched it.
Gotcha. So Amazon, let's check it out. I'm not in that one, so I can't really speak for it too much, but I can take a look at it and see what happens. And earnings is a little bit more riskier per se. I think Mike has you in the calls, right? Or are you in a strangle or are you in a call?
No, I just took this straight up. It was the $200 call for 8-9.
Gotcha. Yep. So you're gonna take it. Gotcha. So you're just holding it for earnings. If it pops up, you're gonna be in profits for sure. Sometimes this could happen though. Sometimes you'll get an earnings pop and you get that IV hike. So if your contract goes in profits before the earnings call, I mean, you could take the guaranteed bag or you could take the lotto approach, and if they beat it, you're gonna take us all out to dinner. You know what I'm saying?
It's up a little bit now from when I took it, but it's not 30%. If it gets up 30% before earnings, I'm taking my money and going. If
Yeah,
I
so
hold
another
it
thing-
and
this
it
is
does
what I'm
what
saying right here.
everyone thinks it's gonna do,
So-
then
so-
I guess dinner is on me.
Yeah, so another thing you gotta think about too is look, you see these percents right here? See where it says 106% and 64%? Tomorrow and Thursday, I guarantee you that 64% will go up to about 90 or 100%. And then you know what's going to happen? This is why people lose earnings. So if you come back down here and you go weeks away, check this out, right? Amazon's IV, this is the IV hike that I'm talking about. It's at $106. So if we look at this, Amazon at the money right here is not normally $655. It's normally like $150 to $200. That means, right, because I trade Amazon every day, I know this, Amazon's normal IV is typically down here at about 30 to 40%. Look where it's at right now in the 2 weeks, 106 and 64. This is why a lot of people fail in earnings, because what happens is as earnings gets closer to earnings, this IV increases, and since the IV increases, all the option premium is going to increase with it. So you could actually be in a put trade, and as the share price is rising in value, you can still walk away with a winning trade, because if tomorrow this 64 goes up to 75 without the market even moving, if we open back up at this share price, your contract just gained 10 or 11% ROI without having to do anything. As it gets closer, this number will jack up because they want to price point all the retail traders out of this trade, because they know Amazon's going to move one way or another. And that's why people fail at earnings. I like to take it sometimes and get in like you did, and I'll ride it up. And if I get 25, 30%, like you said, I'm taking my money and I'm walking away because that is the guaranteed bag. You know what I'm saying? So
Do, and now that you showed me the trail stop limit, that's something that I can possibly implement as well.
you best implement it. I want you to shout me out when you walk away with the 30, 40% winner. You know what I'm saying?
Definitely beast mode.
Yep. I like seafood and steak. Now, hey, happy to help. Hey, we
That's
got
what
any
I like.
you're good. All right, who's next? Any other questions?
I have a question, Brandon.
Go ahead.
Okay, so this is still dealing with the weekly income plays.
Okay.
Because it's being held over time, when I'm looking at Thinkorswim and I go in on the desktop version, I know it's a lot going on, but it's showing me the daily gain or loss, and there was another percentage. And I saw the daily gain or loss like last week, and I was thinking that was the overall trade, but it wasn't. So I was getting confused. I don't know if it was just too much on the screen or what. Can you kind of just review those pieces on that screen and make sure that we're looking at the right figure before we close out?
Yeah. So I mean, it's hard for me to show you because I'm not in any trade right now. I can make sure I'm in a trade on Thursday if you need help, or I can screenshot it to you when I take a trade tomorrow. But there's two things under your monitor tab and your positions tab, right? When you're in your positions tab and you click the little arrow to drop it down, you're going to see two different percents. You're going to see open and you're going to see day. So the difference of this is don't get confused because your day could be up $210, but you could still be overall down because you have to go by the open percent. You follow me? The open percent goes by when you take the trade and you take it from the open. That'll mirror if you're up 5, 10, 15%, or you're down 5, 10, 15%, but it can share like the dollar amount. So when you go into the day side, right, and you're in a trade, it's only going to show you how much it's moved and fluctuated in today's session. So I think that screws up. It could mess you up too. I think that screws up a lot of people because they're looking at the day gain and be like, well, I'm up $210. I'm closing out. I mean, that's what it moved today, but you could still technically be down $300. So then if you're down $300 and your day gains 210, now essentially you're down $100, but you're still negative. You follow me? So when I look,
yes, I definitely am following. Yes.
Got you. So when I look at my position, especially the weekly income plays, I look at my call and my put, and I see what the dollar amount from the open is on each side, and that's how I can determine if I'm net profitable without getting all crazy analytical of like where'd I get in on the option price and trying to figure it out myself. Because when you log in right on your phone, it could do all that for you if the desktop version gives you too much. You know what I'm saying?
The TOS on the phone is a little clear. Is that what you're saying?
I think it's way clearer, you know, because it's not. I mean, I think the desktop's cool too, but if you think it's too much noise, you could just go right on the phone app. I'll show you. Let me see which one I have, because I got TOS too. When I take the trades, that's all I post up. Let me see. It's the one with it says Thinkorswim with the little. It's like the little blue star, or whatever you want to call that. It's like a white emblem with a blue star.
You can't do the trail stop limit on your phone though, correct?
Nah, you can't. You got to do it on desktop.
Okay. Okay. Thank you.
Yep. Hopefully that helps you a little bit. If you need more help, when I take a position tomorrow, I could either send you a screenshot or you could hop on the room and I could show you if you still need help.
Okay. Okay. That sounds good. Thank you.
Yep. Appreciate it. Excited again. I still have a question regarding figures and percentages. Daily loss gain. Yeah.
Yeah, that was the question I just asked.
Gotcha. Awesome. Not a question. I must want to mention something crazy with SPX. I had a call only worth 15 cents around 3 p.m. I hadn't closed it because what the heck is only 15 cents? It ran to $2.20 when SPX spiked before close. I didn't know they could recover that much from almost nothing. Absolutely, Josh. Absolutely. So, like, this is the thing right here. You come here to SPX. I'm gonna share something with you. So, like, let's look at the chart real quick. SPX. Let me see here. The end of the day, what did it? Did it rip or did it fall? Yeah. All right. So you see this pop right here at the very end of the day, the 54.30s. Let's just say you took the 54.50s, right? You come back here to your Thinkorswim. Today's contract, 54.50 calls right here. You press copy. You come back here to this chart. If you got in right here at this candle's close, or when this candle opened at 1540, I'm gonna press Control V and bring up the spark chart and check it out. Them contracts went from 17 cents up here to $682. Now remember this. If you entered when that candle closed at 1440, that candle's closing price is at 60 cents. That's $60 right down here. At this high, those $60 now turn into $700. That's the power of SPX. I use the mobile app. Can you do regular trail stop and not yeah, you can do regular trail stops, just not the trail stop limit. Can you give us more SPX plays? Absolutely. Every day I trade SPX. You know what I'm saying? Every single day. So like today, I took SPX. I actually alerted SPX calls. I took my calls like right here, and this little bit right there, that was enough to get 70% ROI. And then if you would have taken the puts like right here, this right here, you would have got about 1,000% in one day, in one freaking day. And we're not just trading them just to be crazy, because if you remember, I've been using Swingmaster Pro to call out the trades. Why we do, right? SPX. Well, what are we doing? We're using AI. Check it out. We have our AI Lotto low target, the 54.40s, and we have our AOI Lotto highs, the 55.20s, which we called out today. Check it out. We alerted the puts right here at this candle. That candle was at 10 o'clock. 10 o'clock close. If you entered the 54.40s, right? 54.40s, or was it 53.40s? Let me double check. 54.40s. Check this out. 54.40s. We press copy. Remember, we said at 10 o'clock, right? 10 o'clock. Control V. At 10 o'clock, which was 10 o'clock, is this candle right here. This contract's over here, right here, is $250. What I tell you these things ran to? Told you they went 700%. They went a lot more. They went from $250 up here to $4,000. 1,000% return is 2,500. This is about a 1,700% return. All using Swingmaster Pro AI lotto targets. I'm sick because I TP'd at 50%. Hey, this is the thing. This is what I'm trying to tell you. Now listen, if we take Swingmaster Pro every single day, we make our candles bigger, right? Hear me out. Even though we get 1,700%, you can always let a runner go. This little move right there, 50%. This little move right there, 50%. This little move right there, 50%. This little move right there, 150, 200%. This move, 1,000%. Still got your 50%. 50%. Moral of the story, there's tons of money to be made in SPX. So you want to day trade it with us? Hey, we trade it live every single day in the room. Every single day. Every single day. So sometimes, like, if you follow Mike's plan, you're in a trade school. He has certain days where he trades. I just trade the odds, and I trade every single day. I'm putting my money in every single day. You know what I'm saying? They pickle me because I TP at 40, 50, 60%. They say, why don't you let a runner go? But I need to start letting a runner go because one trade, one contract from 250 to $3,000, that's a huge account boost. You know what I'm saying? Huge. We have any other questions?
Got a quick question, Brandon.
Go ahead.
On your swing trade for the Iron Condor on SPX, I see
Yeah.
those coming out at like 107. That's my time, West Coast.
Yep.
Is that when we're supposed to take the trade at after closing bell?
Yes, sir.
Got it. Okay.
Because you
I
can,
didn't know we
yeah,
can take that trade at that time.
yeah. So we only take it after the market closes.
So does that mean it's just going to fulfill when the market opens, or is it like SPY when you can still sell out?
Oh
You can
no,
still
boss!
buy in.
It's an ETF. You have until 1:15 to take the trade on SPY, Qs, IWM, SPX.
Oh, okay. That makes sense.
Yep, yep. So that's why do we take those trades? So hear me out. Now you have to open up a can of worms, but it's all good. I love a can of worms. You see right here where it says our AI swing trade. Why do I take some of the Iron Condors I do? I use this right here. This tells me where to put my brackets, where to put my levels at, and I have about a 95% win rate. So I mean, you see how much we win. You know what I mean?
Got it. Yeah, I'm gonna start jumping in on those as soon as I see them then.
Well, I mean, hey, that's if I decide to let you in on my cash cow. You know what I'm saying? No, I'm just kidding.
Well, when I see the diamond ones, got the smaller account.
Yeah, it's all good. It's all good. Now, but I'm saying, hey, tell them. You see how consistent it is. You know what I mean? But
Yeah, for
yeah.
sure.
So you know us. We mastermind. We don't just take trades just to take them. You know what I'm saying? Dion says, how long do you have to be in DCG to get the AI Swing Master Pro? How long you been in, Dion?
About
How long
7
you
months strong, man. 7 months strong.
Okay, I got you. Yeah. So, what do you normally trade?
It was just a joke. I'm not ready for it yet, man. I'm still building up my knowledge.
Got you. Well, when you're
I'm still,
ready, you
still
reach
taking
out
on
to me.
one
All right.
contract and just getting used to it. So still
Yes,
getting used to
sir.
thinking swim and everything like that. So, but I'm gonna get there. I'll be there soon.
Absolutely, absolutely. In WhatsApp, Monisha, in WhatsApp. Yep, in WhatsApp. And I mean, I'm not sure if some of you guys are in a trade school. Monisha, are you in Mastermind or are you in a trade school? Or are you in? Yeah, I don't know. I'm not sure.
The full package for each piece mode.
Got you. Then send me a message. I'll put you in the WhatsApp chat.
Okay.
Like, we have a chat just for option traders. You know what I mean?
But what's your Discord channel where you put everything?
I'll put them in WhatsApp. I don't put them in the Discord.
Oh, okay. I get them in
Yeah.
the options channel on WhatsApp. I see the little diamonds and stuff. I didn't know what all that means. So I guess I'll wait for you to do a class on those, the Iron Condors.
All right, we'll do a class. Maybe next Tuesday. I'll tell you exactly what to do, and if we have a lot of
Okay.
interest to roll with it. You know what I mean?
Yeah. Did you do a loom? Because I'm
I did a
thinking you
loom
did a
already.
loom. Yes, I'm saying you did a loom on that. That's in the WhatsApp too.
Yeah, that's in.
All right, I'll go look for the loom.
It's in the Facebook group too. You just search my
Okay.
name. It's probably like a month ago, 2 months ago, maybe.
Okay. I'll do a search.
Absolutely. Does TOS have templates for old man eyes? I guess. Where will this call be posted? I'm gonna post it in the Facebook group. Soon as we end this call, let me sync it and I will post it in the Facebook group. And just comment DCG below it, and I'll keep posting them for you. You know what I mean? Absolutely. But hey, we have any other questions? Or are we good for tonight? All right. Well, hey, I appreciate you guys. If we good, do me a favor. If you guys got value out of this call, give me a DCG in the box right now. you learned something new or you gained value of it, give me a DCG in the box. I appreciate it. I appreciate it. Yep. Hey, thank you. Thank you. Awesome. All right. Well, hey, you guys ever have comments, questions, or concerns, never hesitate to reach out. Tag me in the Discord. Send me a message. And hey, we're going to get a hat. You know, Trump has Make America Great Again. We're going to get Make Stock Options Great Again. That's our swag. You know what I'm saying? Hey, y'all have a blessed one. I'll catch you guys on the next one. Beast Mode out.
Thanks, Brandon.